ya, boy. Sure is, Marina. All right, you guys ready? All right, let's get on with it. Hello, hello, hello. How are ya? How's your mum? Welcome to Forex.Today, the YouTube community of more than 20,000 foreign exchange traders. We gather here today to conduct technical and fundamental analysis with the overriding goal of planning our trades in advance. Because trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. Please stay small, stay humble, focus on the long term, never risk money you cannot afford to lose. Hey, my name is Wayne. So we got a boring week this week. I can't get my coffee over my mic. Nothing going on. Hardly anything going on. There's nothing going on. Boring week. Oh, except for CPI, FOMC. I think there's a Bank of England in there, probably an ECB somewhere. Actually, it's quite a busy week. I'm also leading a board meeting. On Wednesday, the Council of Investment Advisors is meeting for, we're managing my money. We're going to turn a $50,000 account into $1 million account. Cool. Would you like to learn how to manage money? No, this is not a trading account. It's an investing account. It's my corporate retirement account. So you're managing OPM, other people's money. I have a portfolio. I'm going to teach you how to build and construct a portfolio. And then I'm going to teach you about balancing and rebalancing. Right? So you're going to learn investing, macroeconomics, business cycles, seasonal cycles. This might actually be the first board you've ever sat on. I have a board meeting today, and then I have a board meeting on Wednesday. So not my first rodeo. So if you ever want to learn how to be on a board, if you ever want to learn how to be a money manager, financial advisor, long-term investor, if you're interested in income as well as capital appreciation type strategies, and like I said, construction and management and rebalancing, and rotating of the portfolio. If you're interested in all of that, it's investorbootcamp.com/CIA. We are meeting Wednesday. It's happening. So I have $50,000 in an account. I think 10 is cash. I might add some more money, which reminds me, if I'm going to add more money, I need to do it today or tomorrow so that it's there in time. But nonetheless, it's begun. If you want to learn how to be a money manager, this is for you. Also, if you just want to, let's say, manage money for, let's say, a nonprofit organization, if you want to manage money, your own family money, if you want to, all of it, if you want to work in endowment. So I'm going to manage my money so that, let's say I live for another 38 years. My money is going to last for at least 380 years. My money is going to live long after I'm gone, and will be able to support my family and my charities. So if you're interested in that, okay, join the CIA. Oh, looks like I'm on the screen. Okay. Let me point you to some resources, youtube.com/Forex.Today. And then here's us. We're meeting now. This is what's happening now. Yeah, see? Cool. And I want you to look under the video and you'll see access to a whole bunch of resources. Many are free. If they're not free, they're cheap. Most are free. So resources for traders and investors. I want to point you toward a trustworthy and ethical foreign exchange broker. Why are they trustworthy and ethical? They're an actual ECN, and ECNs don't trade against you. Most brokers, let me say it again, most brokers make money by trading against you. They think you're going to lose money, so therefore they do whatever they need to do to get you to open a trading account, and then they assume you're going to blow it up, so they never execute your trades. It never goes into the interbanking system. It just stays within the broker, and they know you're going to lose money, and they want to keep every penny of it. They want you to lose. Trader's Way is different. They're an ECN, and I've seen it in action. When the tide went out and you could see who was naked, Trader's Way was afloat. They were great. And it proved to me that they don't trade against their clients, so therefore the only way that they make money is that you succeed. If you appreciate that, try Trader's Way. I don't have a link here to the CIA, but it's under Investor Bootcamp, which is my education group. And then you go to CIA, and this is real business experience. You will be able to manage money, and you'll be able to claim this as work experience. You will know how to manage money. You'll know how to manage endowment. You'll know how to, manage the, the investment arm of a nonprofit. Like, for example, what if your money lived forever? What would you do with the money? You would probably give it to your favorite charities, right? Imagine every year your money made $80,000 a year, and every year you gave $80,000 a year to charity, and your actual principal capital stays the same. So every year for 100 years, you can give $80,000 to a charity. That's the idea, guys. Join the CIA. $2,400 a year. Okay, all right. So I was being facetious earlier about this week being boring. It's a very, very busy economic schedule. We have lots going on. Particular, the question of, will we end the year with risk on, or have we topped out? And in the next 72 hours, we'll find the answers to that question. Okay. And is this number a concern? Yes. And is this number an opportunity? Yes. Followed by this. But at some point, you're going to want to kill switch. Is it this number? Maybe. Is it this number? Maybe. But you need to make those decisions yesterday. Okay. It's a big deal. Today's a big deal. The first catalyst isn't until tomorrow, and that will be the first opportunity of laying down bets. That'll be tomorrow. Yeah. So you'll get some vol tomorrow. And I think it'll be very informative of what the market is thinking, because I think CPI, for example, let's say, comes out higher, expected, or lower. Hell. All right. If it's higher, it could be interpreted as good news. Good news becomes good news. Comes out of expected, which is not bad news. And then if it comes out bad, that could still be interpreted as good. So I think if the market wants to use CPI as the catalyst for another up, they're going to use it. What percentage of NASDAQ traders make money on the way down? Not very many. 1, maybe 2%. So people either go to cash or they rally it up one more time and hit the next target. What percentage of the market would like it to go up? Well, much higher percent. Now, smart money might be out, but dumb money meaning dumb institutional money, needs it to go up, especially if they haven't hit their targets yet for bonus. So I think there's a lot more pressure for up. So that the pressure is high pressure here and low pressure there. And whoop, the market goes up. And then I think the high pressure is here. And then, so you get one of these things where you can have a fast up and then a fast down. And it has nothing to do with reality. It has to do with smart money being out of the market and dumb smart money, the bad hedge funds, pushing the market, pushing a thin market to hit their short-term goals. It's not value creation, it's selfishness. But nonetheless, they got more money than you, and they can move the market, especially a thin market. So yeah, get ready for, let's say, high volatility and low volume. Low volume, high volatility. Not a fun market. Not a fun market. Does anyone here want to see what typically happens to the yen pairs the next 2 months? Do you want to see 20 years of analysis of what I think for like pound yen and euro yen and CAD yen and Aussie yen? Would you like that data? Okay. Cool, because I already covered this hours ago. So you don't have the information and you are already behind. And this will happen sometime in the future. So, yeah, here you go. It's free. You'll get it 17 hours late, but you didn't pay any money. So visit the page, subscribe, click the notification so that it'll remind you, and you'll end up probably watching it late tonight or tomorrow morning. Hey, but it's free. Okay? Don't be mad, be grateful. Looking at the no diggity, no Dow, there's definitely profit taking going on, definitely. How do I know? Okay. How do I know there's definitely profit taking going on? How will I know? Triple top? No. Well, that doesn't tell me anything yet. That's not necessarily, it might be forming such a thing. But it doesn't tell me for sure. 12-12, again, a profit taking. Yeah, that's a very key week. Lower low. No, you guys are talking technical analysis. That doesn't tell you anything. Technical is just price and time data. It doesn't tell you volume. It doesn't tell you numbers of bulls and numbers of bears, and in particular the change. Seasonality? Nope. That's normal. It doesn't tell you what is. I'm talking about the actual numbers of bulls and bears. So therefore, if there's profit taking, it doesn't mean any bears. It just seems there's just less bulls. Commitment to traders report. Thank you, Sam. So that's already been covered. Yes, the COT data. Yeah, it's good to know. Doesn't mean it won't go up. It just means the market is thinning. When you look at it on a 4-hour, what does this say? Up forever. Okay, because remember, the way I teach you, and let me do a plug here if you don't mind. For $88, I'll teach you how to trade. That's it. And when you look at this chart, it's up. That's it. It's up. There's no dilemma on this chart. Now, does it mean it can't do all of this? No, I didn't say that. But does it say that now? It definitely does not. This says up forever. Now remember, it's just price and time data, so it doesn't know the future. It doesn't know the future. It's not thinking about the future. It only thinks about the past. But on November 2nd, you should have bought this asset. And you'd still be long and strong. There's nothing interesting going on. You had an up and a new buy. Okay, then we've been riding the 21. We consolidated for a couple of weeks. Yeah, what do you care? Okay, and now what? Well, what the chart says is it will go up forever. We have linear regression studies on this. Okay, here's oops, that was so slow. I don't know why it's lagging. Okay, there we go. Here's the channel we're in. Does that say bearish? No, it's extremely bullish. Cool. But we know we're losing some bulls along the way. And for all those other reasons you guys mentioned. Are they worried about a top? Yeah, but they're afraid. They're like Grandpa Joe Biden locked in the basement, afraid of the boogeyman. Okay, it's bullish. That's it. Until otherwise, it will remain bullish. So they're worried about a triple top, maybe. Seasonality, yes. 12-12, yes. Now, what is the significance of 12-12? Well, back in January, 12 months ago, I gave an outlook for the year, and I said profit taking would start to take place 12-12, which is tomorrow. So if I'm right, it's about to begin. Now, to what degree? What percentage of the market starts to take profit? Is it all this week? Well, I suppose it really depends on what CPI and FOMC say. Could CPI and then more importantly the FOMC, could they create massive profit taking? Yeah. Will they? Well, we don't know yet. But somebody's going to get out. But everybody? No. But will the harvest begin? Yesterday in the day trading group, last night in the day trading group, I think it was. Yeah, I'm pretty sure it was. I gave the analogy of that I am the vintner in the field, crouched down in the soil, smelling the soil, maybe even tasting the soil. I'm paying attention to where the wind is coming from, if there is wind, how cold it is at night, how warm and sunny it is during the day, or maybe it's warm but no sun, or maybe it's cool but sunny, maybe it's cool but cloudy. All of this has an impact on my grapes. And do I let them hang one more day? Well, there's a lot of pressure on me. I have all these seasonal workers that are ready. They got their clippers, they got their buckets, they're ready to go in the field. And I say, one more day. Because tomorrow's CPI, and right? And it might make my harvest a little more bountiful. But if the numbers come out wrong, now pick the grapes. Time to move on to the next part of the season. It's profit-taking, harvesting. But do all vintners pick the same time? No. Do all grapes get picked at the same time? No. Do all parts of the field get picked at the same time? No. You probably start with the cooler areas, not right? Or the more moist areas. The higher and drier and sunnier areas, maybe you'll leave and you'll get to them and they'll have 1 or 2 more days or 1 extra week of ripening to make it that much sweeter. Or the sugars actually turn, right? But anyways, so you got to make all these decisions. And these are the decisions that institutional investors are going through right now. And we have now entered the crush, as they say in Napa. You got to get ready to pick your grapes, but every hectare or acre has a different decision toward it. And the harvest may begin en masse this week because of what the FOMC says, or just, let's say, 25% of the market takes profit because they're making much longer term decisions and they've already basically made their money and they're already planning out next year. But there are others that still need to squeeze a little more juice out of every grape. They need this market to go a little higher, push it a little further, get to that monthly target, and then take profit. Okay? And so not everyone's going to make the decision at the exact same time, but you could have a catalyst in the market fundamentally that instead of 25% of the market takes profit, it could be 60. And then that freaks other people out and hits their stops. Okay? So, you got to be ready and willing and able. A retail trader doesn't know the dang difference. And they just show up and they're like, "What's up, fellas?" Okay? "What's up, fellas? What are we doing today? What's going on?" You're like, "You have already lost." Okay? So anyways, welcome to the crush. Who's going to crush it the next 4 weeks? We've been witnessing a rotation out of tech and into Dow. Be interesting to see money coming back to to NASDAQ. Yeah, I hope so, Morena. Yeah, Morena's loving the pound yen. I mean, we might as well, let's just pull that up now. All right, so with the pound yen, let's go back into time. I spent a week and a half roughly preparing members of Investor Boot Camp, and you guys, I'm sure I've mentioned it here, for a potential big change here. Now, did I say 1,000 pips? No. No, I did not. Okay. Now, I actually was on pound yen specifically, so let me go there. Okay. So I had done just a big lecture on how to do this, and I ended up, right? I ended up selling it here. Can you even see that? Because I have to go blue. Look at this, the entry. The entry is right here. No. Picking the top, huh? Picking the top, son of a... And it did drop 1,000 pips. Now, Marina says now it's up 500 pips. Oh, yeah. Cool. But to me, the most important part of the lesson here is that there's preparation and reason and rationale for all of this happening. Okay? And the uptrade to me is it's too reactionary to me to teach it. It's more like I don't actually want you to do it kind of thing. It's a reaction to what's happened, but not a preparation. So you're sort of like betting against what just occurred. I don't like that idea. Now, you might be on it making money and perfectly fine. But as far as like a teaching opportunity, to me, it's not good. Right? Yeah, it looks like Morena got the basically the same trade, right? And so this is just one pair, but pound yen did drop 1,000 pips. But I spent a long time setting it up. And then if you go in, I took that 1,000 pip trade. I don't even know if I can go back that far now. On a 5-minute chart. So technically it was a scalp. Here it is. Okay. Double top of a double top. Lower low, lower high. Sell. Right there. Shut the back door, huh? Cool. So anyways, it's there. It's there. It's just doing its thing. Okay. I don't care as a coach about the pips. I care about the setup. I care about the preparation. I even gave analogies of, picking the ground that you will battle upon. You take the high ground and set up cross fire positions and you booby trap everything so that when you fight, you don't have a fair fight. You have a strategic advantage. And that's what I care about, that you trade with a strategic advantage. Okay? Cool. That's all. What happens now? Well, there's a lot going on and there's some madness to this. But I think a lot of this is the destruction of the carry trade. Some of this is the flow of capital for oil. Some of this is a change in monetary policy. Okay. 18 months from now, the interest rate in Japan could be almost 1%. It's negative right now. If we move interest rates to 1%, will that impact the value of the yen? Yes. But more importantly, what does it do to the carry trade? Okay. If the Fed goes from 5.5, so we're at 5.5 now, okay, %. And if you're going to do a USD yen carry trade, you have to borrow money from Japan at negative 0.1. So you have a nice carry. But 1 year from now, or let's say 18 months from now, what if the United States is at 4.0, okay, and Japan is at 1.0? Okay, then the differentials drop by more than 50%. There might not be enough money in that carry trade to justify anything. You'll be making about as much as inflation. Okay. But see, like Richard makes a good comment. Ueda's looking more at wage inflation, and he sees it blah, 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 blah. Okay, great. QuantBox gathers all the opinions of the Bank of Japan based on all their economic data. Wage inflation, product inflation, housing inflation, supply chain inflation, growth, comparative analysis of growth to inflation. Okay? And it gets all put together. We extrapolate all the data and we plot it on QuantBox. So in 18 months, interest rates will be about 1% in Japan. According to whom? The Bank of Japan. So here on TV and in newspapers, you're going to hear people debate, just like what Richard said. Oh, but Ueda's looking more at this, and then they're looking at that, and then the blah, blah, blah. They've already told us. It's already in the data. We have it. I have it plotted 18 months in advance. There's a chart, for crying out loud, that incorporates all of that discussion that you're talking about. It is the right thing, but it's too subjective. And then you'll get people on TV and they'll debate it. Well, if you look at the inflation, that means they can or cannot do something. Well, if you look at GDP, they can or cannot do something. Oh, well, if this, and oh, well, if that. Therefore, I think this, I think that. I'll bet long, I'll bet short. This is good, this is bad. And yet you could just listen to the Bank of Japan. We don't need the other stuff. We don't need all that noise. Because their opinion might be wrong. Their opinion might be stupid. Their opinion might be them selling their positions to you. They make money by getting you to buy it from them. You don't know if they're strategically playing you or if they're mediocre. They're probably mediocre, right? Maybe they're dumb. Maybe they're the worst of the worst, but they're on TV. Or maybe your journalism major writing at the newspaper doesn't know what he or she is talking about. They were just assigned this piece and they don't know anything about trading and investing. But then you're like, well, the Wall Street Journal said it, so it must be true. I'd rather you just have the truth, and I bring you the truth through QuantBox. It's literally there. So when you take all this truth, I can say to you, I don't know when, but I believe it's coming soon. Soon enough that I would sell a double top at a profit-taking zone with a lower low, lower high, and we'll see what happens from there. Oh, it dropped 1,000 pips. Well, that's a pretty good guess. That's a pretty good 5-minute scalp. But the 5-minute scalp didn't add any value. Thank you, Maida. I appreciate that. Okay. Don Pablo's like, well, we've already hit our monthly targets and all that kind of stuff. Yeah. But for some, you have to put it together strategically from an institutional point of view. Clearly, I was not the only one to get out at the top. That's factual, right? And then down a break below here, we clear, and then a break below here, we clearly hit some stops, right? Right? We clearly hit some stops. But let's just say the ones that are in control of their decisions made the decision up here. Those that got stopped out here and then got stopped out here were not in control. They were stopped out. The market dropped and hit their stops. They didn't control anything. They were victims. Just another victim. Okay? Cool. So what did these smart people do? They bought it back. Okay? They bought it back at the bottom. And now they might be in all of next year. Now, we have some seasonality that says, well, this can come way up and then it can come way down and all that kind of stuff. And then we have fundamentals like the market is priced in that the Fed's going to go from 5.5, okay, down to 4.0, let's say. But what if 18 months from now we're at 5.0? Then there's a little more up than down. Let's say in the next year, the Fed cuts once or something, right? Now, once again, QuantBox, you can just pull it up and look at what the Fed has told us interest rates will be, and meeting by meeting for 18 months in a row. Okay, like now, oops, that's supposed to be, okay. Now, and then in 6 weeks, 12 weeks, 18 weeks, so on and so forth, all the way out till the end of 2025, they'll tell you interest rates. QuantBox has it. So we don't care about that. We already know. We've known. And by the way, that knowledge is why the stock markets went up in November. The Fed adjusted their summary of economic projections. So now everyone's going to pay attention to the wrong thing on Wednesday, and the smart money is going to look at the new SEP. They're going to plot that out 18 months, and they're going to make investment decisions. So the Fed will almost certainly hold, and then people will debate. You can debate all you want. You're probably a master debater. I will listen to the Fed. The Fed has PhDs and quants that work for me. They do all the hard work. They present their data to their council of investment advisors. And the council decides the future expectations. And then I analyze their votes and make a decision on how to invest money. Nice. Yes, Richard, I have every major central bank in the world out 18 months into the future. Yeah. Yeah. Okay. So cool. Nice to have the right tools, huh? Yeah. So anyways, I hope you had a wonderful weekend. We've had miserable weather here. Believe it or not, there was a tornado. Not in Georgia, but up in Tennessee. And you're not supposed to get tornadoes in the winter. But if you go even further north, all the way to Canada, Canadians don't have snow yet. Or at least Western Canadians. Yeah, Miami's nice. I was looking at places for us to hold our Miami event. I wanted a place in South Beach. I don't think that's going to work out. I can't find the right meeting space, but I guess it's downtown. There's one in the Wells Fargo Center, and there's another one. It's on the waterfront right next to a big park. I think it's downtown. But yeah, I'm looking at that so we can all start booking our hotels. Yeah. I suppose we could do the event in Miami. See, I got to hold a CIA meeting. So maybe I'll hold the CIA meeting there, and then we could just all Uber back to the party, and I can hold that in South Beach. It doesn't have to be right next to the meeting, but that's just so much easier. Yeah. What's downtown like, Maida? Do I have to bring a gun? Do I have to, rent an armored car? Or is it nice? People are like, dang, you're going downtown? Or is it just boring, cold, and deserted, empty? I've been to lots of downtowns that are just deserted. Yeah. You're like, it's nice and new, but nobody's here. Yeah, it used to be dangerous, yeah. Yeah. Well, I'm a kung fu master, so nothing bothers me. I just have to get out my warning before necks start snapping. Excuse me, sir, but I'm a lethal weapon. Yeah. Oh, that's Midtown? Well, I'll probably get some good, cheap rental space down there. Yeah. Yeah. I was in a real tough gang in Canada. No, wasn't in a gang. I grew up in a rough neighborhood, though. Oh, the fancy place is Midtown. Oh, I see. Okay. Yeah, okay. Brickell area. That sounds familiar, so that's probably where I'm renting. So anyways. All right, cool. So I'll let you know, Maida, and maybe you can help me pick out a good place for us to get a crew together. Just, 10 people, 12 people. We can have a little get together, have some food and drinks, and be fun and affordable. Yeah. All right. So anyways, so the up is the capitulation, or let's say the massive, right? We had all the stops, okay? And then smart money bought it back. There's no other way to really think about it. There was every person on the planet was long, and the smartest money saw it coming. But to be honest, this is the time of year for it anyways. So the smartest money pushed it down and almost certainly bought it all back. Because the Fed is probably not going to cut, or not cut soon. Okay? So we'll see. Maybe there was too much fear, but no harm buying it back cheap. Okay? But now we're at this point where I'd be cautious. It's if you didn't do it Friday or even last night. Okay? If there's nothing to do now, you're so crazy late. As Maida said, you're 500 pips late. Oh my God. So yeah, now what? Yeah. I mean, we could look at like the price action on the smaller time frame. Okay. I mean, obviously there's traps and breaks in here. Okay. But now we're back up to resistance. So whatever. Like I said, I'm not interested in counter trend trades. Obviously you can take them. Obviously there's nothing wrong with them. But if you think about them from the point of view of a coach, there's nothing to coach. Okay. Look where we are. Oh, just amazing. I got it all marked out for you. So let's take a look at commodities. There's your my WTI going on. I set this one up last night, I guess it was. No, this morning. So paid members of QuantBox, I think we discussed this morning. Lovely. Yeah. So look, I don't know if it's breakthrough time, but that is a setup. That's all we know. I don't know if we're going to get to the top, and I don't know what it's going to do after that. A lot of it is probably going to have to do with the economic data. But I think the risk is to the upside. Okay, and I think a lot of this had to do with the World Bank. I think it was the World Bank. It might have been the IMF. Let me do IMF first. Lovely. Boo 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 ba doo. Boo ba doo doo doo. Boo boo ba doo. Boo da boo boo. Bum 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 bum. No, these guys are too busy working on their preaches, their sermons. All right, then I think it was World Bank is what I said earlier today, so I must have been right. World Bank. Boo 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 doo doo. No. 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 Oh, I'll have to figure out. There was a downgrade anyways. I've forgotten where it is or who said it. Sorry, too much going on. But there was a downgrade to global GDP, I believe it over the weekend. 1010. That's not the most recent one. I'm going to see if it gets us closer to those somehow. Anyways, I'll let you work it out. I'll work, but nonetheless, a falling GDP is likely to produce less demand. On how it's just different math. Doesn't matter. There's no difference. Okay. There's different forms. Okay. But it's just math. There's no, right? So the assumption is when you're looking at a channel, what you're assuming is the measure of trend will remain the same forever. So you can do a projection into the future. So I'll give you like equidistant. So I can measure from this top to the current price, and you get some sort of math that helps you measure trend. Oops. This is an equidistant channel, which will allow me, if it will allow me. Oh, it drew it the other way. How funny. Okay, let's do this a little differently from the way it drew it. Oh, there it is. No wonder. Okay. I see it now. Okay. All right. So now I say what I'm doing here is I'm adjusting the variance. So to get this to project, and now I can go out onto a higher time frame, or right? And at this rate, in this time in the future, we'll hit this price. Is that going to happen? Well, to do this calculation, you adjust the size of the range the way you want, and that's the type of variance that you're calculating. And then, of course, you can standardize the variance, so you can now have standard deviations so that these are parallel. I mean, if you don't standardize the deviation, then you get channels that look like this. And you get like Bollinger Bands, basically. Well, that's not very helpful. So then you standardize them. Okay? So, right? So you're flattening everything out in the variance. Okay, great. Now, a linear projection, right? This idea that we're going to be way out here in the future, you're just continuing this slope forever. That the standard deviation, the variance from the mean, and so you can't have variance unless you have a mean, but you just say, okay, this slope of the mean will continue forever, and the variance has been standardized, so now they're parallel, and that will continue forever. And if that is true, in my example that I drew down here, we will be at this price at this time. This price, 43 at this time. Is that going to work? Yeah, but see, now you're just changing all the math and stuff. It doesn't matter. Don't listen to anything with the math. The math is just saying it's going down. Will it continue at that rate of pace for that period of time? No, probably not. But like one measure of this over one measure of that, and is it weighted? Is it not weighted? How do you measure variance? And how do you do this? You're a bull or a bear. That's all you need to do to get there. That's as far as the decision you need to make. So or you can measure it this way, or you can measure it this way. Oops, I keep doing the wrong one. Or you can measure it that way. Which one's right? Okay. So don't get caught up on that. Don't get caught up in that. You're doing the right thing, but you're overthinking it. The whole point of everything, are you a bull or a bear? Don't overcomplicate it. Okay. Do you not need 9 different versions of channels and regressions versus progressions versus channels versus equidistance between? I mean, there's all going to be all kinds of weird math you can apply. Like, look at all these indicators. Okay. Look at all these things. What do all these things do? I don't even know. I used to really worry about it. What do they do now? I don't know. What did it just do? It added these little lines in there. I have to drop into a smaller time frame. Yeah, it added these lines. Okay, let me get rid of my lines. Okay. Now, the first thing is, do I find these lines helpful? Yeah, I could. I could figure it out. Sure. Right now, it's more bearish than bullish, and later on, it might be more bullish than bearish. And great. So, great. Do I need the 200? No. Get rid of that. So, do I have enough information here to make a decision? Yeah. All right. So, now I'm going to use that tool. What tool is this? I don't even know what tool it is. Envelopes. It's some weird envelope. Some idiot's using a 14. Deviation of 10%. Really? I bet you I can mess with this, huh? There you go. I just recreated my 2155. Yeah, sweet. So look, now I can trade with envelopes. Boom. Now, why is that? Knowing how to trade is far more important than knowing the difference between the math in these channels. It's either trending up or it's trending down. You can measure it any way you want. You either buy the dips or sell the rips, right? And I'm teaching to not have over-reliance on the tool, because I need you to swing the hammer. The hammer can't swing itself, but you need a good hammer. You also need to know how to build a house. So anyways, I look at this tool. I don't even like it, so I'm going to get rid of it. Now that I've changed the time frame, that doesn't look good at all. But it works for somebody. Look at all these really idiotic indicators, most of them. A lot of people like ATR. What about you guys? See, watch this. It's going to open a data window, even if I say don't open in the data window. Boom, it opened a data window. Anyways, good. Let's make, right? So I'm sure you could get yourself useful with this. But you'd have to notice a change. Okay? That might be statistically relevant, wouldn't it? It's kind of like recognizing that you have a 1, 2, 3 pattern. You know, it's even more important, and this is why people overuse their tools all the time. In my humble opinion, you should have expected and anticipated this before you see it on your ATR. I mean, I suppose eventually it's all good, but wouldn't it be more interesting if you said down in here, ATR will flip? Knowing that, I think, is more relevant, more important than waiting for your ATR, but I suppose. But once again, it has to do with once you know trading and the markets, then these tools don't become alerts. They become confirmation tools of your trade plan. Right? They're confirming or denying your analysis, but your analysis is what puts you into everything. And it doesn't matter what tool you use per se, right? Yeah, no, almost everything is the same version of the same thing. So like, for example, oscillators. See all this average to range, bears power, have no idea. Bulls power, no idea. CCI, this was created by a guy named Woody, I think. I saw him at a conference 25 years ago. DeMarkers, this is, Force Index, MACD. Most of this stuff I've moving average oscillator, like, oh, that's so much better than MACD. Like, you start looking at all Stokes, the vigor, relative strength. So I spent probably 2 years comparing Stokes to MACD and Stokes to RSI. I'm sure I could trade with Williams percent change. Yeah, I think he's in that book I wrote over there. But anyways, yeah, are these any good? Yeah, probably. But are they basically the same thing over and over and over and over again? Now, they might measure different things, but they're getting to the same conclusion. And what you'll find is most gurus have no idea what they're talking about. And they'll say, buy down here, sell up here, buy down here, sell up here. See how easy this whatever it is I just popped onto my chart? No, that's wrong. Okay? It's wrong. Now, because if you bought here, you lost money. If you bought here, you lost money. But you should know that buying here will make you money. Why? Well, you've already planned out a double bottom. And then you should know here that'll make you money. Why? It's confirming the higher low. And then what about here? Yeah, it's confirming the higher low. So you lose money here, but make money here, make money here, and make money here. And vice versa. But the tool doesn't tell you any of that. This is based on knowing how to trade. The magic that you bring to the market, ladies and germs, is that you know you're a bull or a bear. You've been setting this up. You've been waiting. And now these tools are confirming your hypotheses or not confirming your hypotheses, which saves you from losing money. The tools themselves don't make you money. Otherwise, I'll tell you what. I'll make a version of this tool and I'll sell it to you for $1 million. And it'll be worth it. But you know it doesn't work. Okay? So you have to know, like, what do you feel about this top? Okay? At a top. And then we have lower highs, lower highs, lower highs. The interesting thing is the next higher high might be a buying where every other one wasn't. So anyways, whatever. I'm too pretty to have this conversation. So anyways, I got to go. Look, I got a meeting on, I don't even remember what the meeting is next. We have the market open, of course. Then later today, I have a board meeting. So I have a busy day. And then 4 p.m., I'm meeting with the day trading group. And I'm really interested to see how the market behaved today in preparation for CPI tomorrow. And then Wednesday, all day, no live streams. Okay, no live streams on Wednesdays. The Committee of Investment Advisors is meeting, and we're busy all day. In particular, I am presenting to the board the portfolio. We're breaking down every investment down to the nth. And some are great and some have not been great. And I'll explain some mistakes that I made and things that we want to address. I'll also present some future ideas and get people's opinions on them. Okay? We have to analyze the summary of economic projections from the Fed. And we're going to deploy at least $10,000 in cash, probably more. We're probably going to rotate many thousands of dollars out of certain investments into other investments. We'll see. I don't know. It's the committee's opinion. So Wednesday is going to be an amazing day. If you ever interested in managing money of any kind, family office, institutional, your personal family, right? You want to know how to invest long term. If you want to support charity, if you want to support a nonprofit, if you want to manage money for an endowment like the Rockefellers, I'm going to teach you how to do that with my money. That is happening. It's real. I'm going to show my institutional account. I put in 50 grand. Now it's 55. And I have, there's 10 grand in there. I'm going to add more. So like we got real stuff to do. So if you are interested, email me, wayne@fxbootcamp.com. And you should consider it a long-term, multi-year relationship. Okay? But if you want to watch me turn 50 grand into $1 million, let's do it. Okay? Anyways, email me if you're interested. I want to know what your thought is. I want to know what's going on. Now, for some reason, like 8 people emailed me and then they don't follow up to the emails when I respond to them. I'm like, you're interested. Oh, I want to do this. And then they don't respond. And I'm like, I don't get it. You're interested, but what? What's holding you guys back? Right? Right? So I don't understand. So you should communicate with me and tell me why. And you're like, Wayne, I want to do it, but let me know. Peace on earth. May the pips be with you. May your profits be above average.